Hey, what's up, my friend? So in today's training, I want to share with you the top 3 price action trading mistakes, right, that almost all new traders make. So let's get started. Number 1, you blindly buy support or blindly sell resistance, right? Your thought process is, oh, price is at support right now, time to buy. Or the price is at resistance right now, time to sell. Now, what's wrong with that? Well, let me explain. That's a good question. What's wrong with that? So if you look at this chart over here, you can see that this market has tested support, right, a number of times. I'll just draw this area of support out. Tested once, twice, tested 3 times, and I'll consider this, yep, this is the 4th time. So you can see that, many traders will look at this chart and think, oh, Rainer, look at how strong this area of support is, right? Tested 4 times, right? This support is about to, hold, and the market is going to rally higher. But, hold your horses, right? Because if you look at this, right, things are not as simple as you have just described. Because if you understand price action, right, you will realize that this is more of a sign of weakness. Why? Because if you look at this price action, you notice the market making a series of lower highs into support, right? A series of lower high, lower high, lower high, lower high, and another lower high into support. Each time, right, the buyers try to push the price up higher, they are met with selling pressure to contain these lower prices. So you can see over here, okay, every time the buyers try to push the price up higher, the first time here, they push this much. Second time, about this much. Third time, about this much. Fourth time, about here, before it finally collapse and break down. So this, right, to you, should be a red flag, a warning signal that this market has difficulty breaking out higher. This is a sign of weakness. So long story short, when you notice a series of lower highs into support, this is a sign of weakness. Okay, so understand this. And if you want to think about an analogy, right, it's very simple. Imagine right now in your hands, right, it's a large sledgehammer, right? The kind that where you hit in someone in the head, right, they'll just concuss and that's it, gone. Pew! So imagine you have this large sledgehammer and there's a wooden door in front of you. You take this sledgehammer and you smash against the door. Bam, 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 bam. Let me ask you, right? After doing it, 5 times, 10 times, right, what do you think will happen to the door? Chances are the door will break. And it's the same concept as, the price testing support multiple times within a short period of time, right? The more times support is being tested within a short period of time, chances are it's gonna break, okay? So this concept is the inverse, right, for resistance. Let me just share with you. So if you look at this, so prior to the market breaking out higher, and if you were to sell at resistance, you'll get stopped out again, right? How could you have, get this heads up that this market is about to break out higher? Pardon this horrible looking line, right? So you can see again, price tested resistance once, twice, and almost a third time over here. And the clue here should be seeing a series of higher lows, higher low, higher low, higher low into resistance. This is a sign of strength. This is a sign that tells you that buyers are willing to buy at these higher prices. So don't just blindly sell because the price is at resistance. Don't blindly buy because the price is at support. Look at how the price, right, approach these areas on your chart. This will give you clues, right, to whether it's about to hold or fail. Okay, so this is the first mistake that many new traders make. Blindly buy support or sell resistance. And oh, by the way, if you're enjoying this trading so far, smash the thumbs up button. If you don't, then hit the subscribe button. Cool? Number 2, chasing the market. Oh man, I am guilty, so guilty of this, right, in my own early years of trading. So if you look at this chart, okay, over here, okay, look at how bullish this market is, right? The old Rainer will be thinking, hey Rainer, look at how bullish this chart is, man. It's time to buy, right? The price is hitting up higher, the candles are big, it's bullish. It will go up higher, right, over the next few days. So I buy. And then, market reverse, I get stopped out. So what's the lesson here? And the lesson here is very simple. When you notice such bullish price action in the market, when the market goes parabolic, when the candles look nice, big, bold, and green, when you feel that it's the right time to buy, pause, right? Because it's usually the wrong time to buy. So let me explain why. So when you see such bullish price action, right, the first issue that you will face is that where do you set your stop loss? Where is a logical place to set your stop loss? So if you're a price action trader, which I assume you are since you're watching this video, then you will want to set your stop loss, let's say below a swing low, below support. Now ask yourself, where is the nearest price structure where you can set your stop loss? From the looks of things, right, I would say at least here, right, this is where previous resistance that could become support somewhere here. And of course, you're not going to set it smack on this level. You give it some buffer, maybe somewhere here. Let's say $20 to make things simple. So if you were to buy at this highs over here, let's say this is $31 on the next candle open, your stop loss is $20. Your stop loss is in essence, right, $11. Okay? So that's a pretty darn huge stop loss if you ask me. And what most traders will do, right, let's be honest, right, is that you're not going to set your stop loss here, right? You'll probably set your stop loss, right, let me guess, below this previous day low, right? Maybe somewhere here or somewhere here. And the problem, right, with setting such a tight stop loss, or rather setting a stop loss that doesn't make sense, is that when the market makes a pullback, okay, and let's say it pulls back into previous resistance that could become support and then reverse up higher, you're going to get stopped out. And the worst thing is that you got stopped out of your trade not because you're trading against the trend. You got stopped out of the trade because your timing is wrong. You're chasing the market. You're not trading from an area of value, and that's why you got stopped out. And you're going to, just feel, Argh. Okay, so don't chase the market. When the market looks very bullish or if it looks very bearish, it's usually a sign, right, that you should wait for the market to make a pullback to retrace to an area of value. Okay, so let me give you an example. Euro dollar. So if you look at this, right, this time round, market is in a downtrend. This is the area of value, right? Price testing the 200 MA number of times. Okay, let me see. I can zoom out here. Okay, so again, right, if you notice that for euro dollar again, many traders will look at this chart and, look at this, how bearish this is. Oh, Rainer, look how bearish this market is. Price broke right below this lows over here, right? Candle is big, bearish, and badass. And they go short. And again, the problem with, chasing the market is that when a reversal comes, or rather when the pullback comes, right, there's a good chance that you'll likely get stopped out of your trade. So don't chase the markets, trade from an area of value, right? This, right, gives you a much more favorable risk to reward. This gives you a logical place to set your stop loss instead of, randomly setting it here, here, or here. And when the pullback comes like this, booms, right? Your stop loss is just booms, gone. And the last and final mistake that I want to share with you is this: one-trick pony. Now, there's nothing wrong being a one-trick pony, right? Especially if you're new to price action trading, you need to start somewhere. But as you progress as a trader, 6 months, 1 year into your trading career, you need to develop, right, more than just one trick when you trade the markets. So many traders, right, they will just, trade support resistance. After all, that's probably the first thing that they learn, right, when they learn trading, buy support, sell resistance. And even then, right, it's not as simple as blindly buying support and selling resistance as what I've shared earlier. But that's usually what people, start off with. And nothing wrong with that, right? But if you were to only be a one-trick pony, like, buying support, selling resistance, then you'll miss, trading opportunities like this. Many traders, they'll look at this chart over here. Price is at, let's say over here. Come to resistance, they sell. Right? Price breaks out, they get stopped out when it breaks above these highs. And you wonder why, right? That's because, again, market, right, has formed a build-up at this area of resistance. Let me just point out to you, right? If this is your area of resistance, this is the build-up. Notice how the price consolidate, right, at resistance, and the 20 MA, right, showing, or rather supporting up this price higher. So this is usually a sign of strength, similar to the higher lows, right, into resistance that I've explained earlier. And when you notice this price action, right, you want to be buying the breakout and not selling the resistance. So this is, again, going back to the first mistake that I pointed out earlier, you don't want to just blindly sell resistance. Look, right, at the price action before you make a decision. Okay, so in this case, right, again, right, there is a breakout trading opportunity if you know how to spot it. Another one over here. Okay, don't be a one-trick pony. LVGO. So if you look at this market, this is a stock chart, right? Again, same thing over here. Price broke out of resistance. Look at how straight that line is, Rainer. Okay, this is a very straight line. But anyway, price broke out of resistance. Okay, and it forms a build-up over here. So to a newbie price action trader, they will look to buy support, sell resistance. But at this point, right, let me just bring it up to you here. At this point, right, the price is not at support for you to buy, or nor is it at resistance for you to sell. But yes, there is trading opportunities, right, buying the breakout of this highs, because there is a valid build-up form over here to look for a buying opportunity. So the key point here is, as a price action trader, don't be a one-trick pony. You can trade reversal, you can trade pullback, you can trade breakout, you can trade support resistance. There are numerous ways, right, to trade the markets as a price action trader, especially depending on how the market or depending on what the market structure is. And really, if you want to learn more about price action trading, right, and you want to master this trading methodology, then I got this book over here called Price Action trading secrets. Okay, so this is a new book that I've written, about 140 pages. You can see over here. I'll just show you some glimpse of it right over here. So it's a color trading book, right? Basically, I share everything I know about price action trading in this book, right? We talk about, price action trading strategies to profit in bull and bear markets, reversal trading, breakout trading, how to fine tune and improve your trading results, risk management so you never blow up another trading account, and much more. And if you're interested in getting a copy, right, I'll put the link somewhere below this video. You can get your hands on it, right? Just cover the shipping and the printing cost. There's no markup, there's no distribution fee or whatsoever, right? So this book, it will be $12.90 for those of you in US, right, including the shipping fee, the printing fee, and for international, those outside the US, it's $18.90. And again, that includes the shipping fee and the printing fee, and that's all you have to pay for this copy of this book. So if you're interested, I'll put the link below. And with that said, I wish you good luck and good trading. I will talk to you soon.